Hi, for those of you who don't know me, I'm Wally Obermeyer. It's really nice to be back, at least where you see me again, and give you an update. Here's my view on the economy going forward. Short term, I'm just really optimistic. The vaccines are coming at a fast rate. People are ready to start traveling again and spending money, particularly dining out. A lot of companies have put in cost savings that are going to continue post-pandemic. Some of it is just cutting fat. Another aspect that has been the technology that will continue being used going forward. It's not surprising after the robust returns last year, particularly in the second half of the year, that the market's been a little choppier year to date, a little more volatility, but that's okay. Maybe pay less attention on short-term market movements and so forth, and think of yourself as owning a basket of high-quality companies that are growing their earnings through time. And really think of yourself as an owner of these businesses rather than kind of a lottery ticket holder of, is XYZ company, has it gone up in market price today or yesterday? With the pandemic fears subsiding, it's natural to almost want to replace that with, oh, well, what's the next thing that I'm going to be hit with? And we are often asked, is inflation going to be a problem, and what happens if taxes go up now? And relative to inflation, I wouldn't really worry about it so much. The best way we can protect you from inflation is to grow your portfolio through time, and to do that carefully, of course, so that we don't have big declines, but really to work to grow your purchasing power. And I would say, similarly, relative to taxes, we're not going to control tax rates. They'll be what they are. And so the best we can do is to work to wisely grow your after-tax purchasing power. Part of that involves working to be reasonably tax sensitive. I always say that we don't want the tax tail to wag the dog, but we want to take taxes into account. As an update on Obermeyer Wood, I'd like to share that we did pass the $2 billion mark of discretionary assets under management this last quarter, and I'd like to thank all of you for the trust that you've placed in us. And even though we passed a certain number, we haven't changed a bit. What is important to us is that we do a great job for you. One question we get is whether or not we're taking on new clients. We continue to add capacity. We love to help people, so the answer is yes. Thinking back over the last year, there have been some positive things that have come out of the pandemic, and one of those is it's really, in some sense, helped us crystallize our values and what's important in life. And we think of our relationship with you really as a partner. And we'd love to continue the conversation with you in terms of what's on your mind and how can we help you and how can we support you in terms of financial planning around that. So please give us a call. In closing, I'd like to wish you a healthy, happy, and prosperous spring. And I think this one we'll all remember as we're beginning to reopen our lives and the economy overall.